This morning, we had several key announcements for the stock market, and I want to talk about some of the biggest movers here today and how this all might impact your portfolio at home. If you like my videos, make sure to hit the thumbs up button and subscribe. Let's jump into it. So, Apple is the first stock I want to just show a 1 hour chart on here. You can see Apple really sold off hard here today, and I want to talk about why some of this might have happened. But before we do, of course, this morning we had the Trump and China tariff deal announcement. We also had the CPI report, and we're going to talk about both of those things and how they might impact your stock portfolio here in just a second. And think about, as we go through this, the stocks that are in your portfolio and whether or not this kind of news that we saw this morning impacts your stocks. Let's talk about, first of all, why certain stocks got hit way harder than others today. Take a look at Delta Airlines, which was down almost it was down 5% at one point here today, at one point with a slight bounce back here at the end of the day. Big drop on the stock. Take a look at Amazon, another big consumer-based company, and boom, down it goes. And then if we actually jump into some more examples here, we had stocks like Target, a retail, of course, for the consumer product. Take a look at LUV, Delta Airlines, United Airlines, so Southwest, American Airlines. All of the airlines here are seeing some big downside moves here today. Carnival Cruise Line down. And what you might notice about a lot of the stocks that were down today is it's a lot of consumer discretionary type names, travel stocks, retail stocks, things like that traders or investors might be selling in response to the announced tariffs. And I want to talk a little bit about what this all brings us here today. So today we heard from Trump. Trump says that U.S. tariffs will be set at 55% and that China is setting U.S. imports at a 10% tariff rate. Now, this matters quite a bit because we've been in limbo for a little bit. We've had this 90-day pause where we knew that U.S. and China were going to be meeting and things were, progressing, but we didn't know what the tariff actually, what the final numbers would come out to be. So Trump is claiming that they're going to be set at 55% and China is going to be at 10%. Lutnick says the deal should resolve rare earth minerals, and deal aims to keep Geneva trade truce on track. So this was largely a good thing here in terms of, developments on the trade front. But some scrutiny came into this because now, the market's settling in with the idea that, hey, you know what? We are going to actually have 55% tariffs, and those are more likely to stick. And so the market, I think, in response to this, had some interesting things to say. I wanted to also show you something else. So today we had the inflation report, right? The CPI number this morning. And this was actually a bit of good news. In fact, if you look at your 5-minute chart, which we'll take a look at that just a second, the S&P 500 stocks across the board were up briefly on the CPI report, which came in better than expected. We were expecting 2.5% year over year inflation. We actually got 2.4%. So what this means is that, I think that this could actually suggest that in the bigger picture, the Fed is likely going to cut some rates this year. Let's talk about something here just on the inflation front for your portfolio before we get into some individual stocks. So we were expecting 2.5, we got 2.4. So that is 1, 2, 3, 4 times in a row where inflation was expected to be a certain number and the number actually came in less than that. That's 4 times in a row, and we are getting awfully close on a long-term trend to the downside here to the Fed's target inflation rate of 2%. Many traders and investors are actually frustrated that Powell has continued to not want to cut interest rates. Some people claiming that it is politically motivated, and me giving him the benefit of the doubt, I'm thinking, hey, maybe he's just very cautious on the trade deal stuff. But now that we have some trade deal, at least known facts, right, likely we're going to see tariffs settle around where they currently, just negotiated them to be. And so the market now has some knowns. So with those knowns, that's where we go into, like I said, certain stocks dropping harder than others. So why did Apple and Amazon and Delta, why did these stocks move down here today? Well, a lot of these things, like I said, are consumer-based companies. Take a look at Amazon, right? The market, of course, this is the consumer 101, people ordering things off Amazon, things that they may need, but a lot of purchases, of course, are things that they don't necessarily need, that they just buy out of convenience or buy for fun. And so we also see Delta Airlines down here. So what I think this is telling us is that the market is kind of saying, oh shoot, okay, we're going to stick with the tariffs. They're at 55%. Sure, they're not the 145% that Trump put on, threatening China, but they're still 55%, and that is a large tariff rate. And so perhaps what we're seeing here, not just in these individual stocks, but take a look, for example, at the government bond yields, right? So Treasury yields actually dropped pretty hard here today. This is the 2-year yield following. Actually, we can get down to the granular level on it. So the CPI report here came in soft, as well as the tariff announcements, the Trump announcements here. Again, we saw a move lower in yields here today. And what that may be suggesting is that we may be seeing the early signs of an economy that is starting to cool off and slow down a little bit. And while tariffs, the big thing I've been saying about tariffs for a while now is that they're not necessarily, they could be inflationary to some extent, but there's a bigger chance, in my opinion, that they could be concerning in terms of a economic growth perspective. And when we talk about a stock like Delta Airlines, they want the economy to be booming, right? Because the more the economy is booming, the more people are traveling for leisure or for business, right? So that's good for their stock. Stock's been doing really well here, and I wanted to talk a little bit about Delta because I actually did something with it in my portfolio here recently, and I'm feeling like it was a decent decision to do. So recently, if you've been watching my videos here, I've been talking about how I actually sold a call against my position in Delta Airlines. I bought Delta Airlines during the April sell-off, and I did decide to actually sell a covered call, a $55 strike price call on Delta Airlines. The idea here was essentially, I think the stock has run really hot, and I don't particularly love the earnings. Let's actually take a look at this. What we could do here is go over to our financial data. Let's pull up our financials report, and let's just say I want to pull up, let's scroll down here and do Delta Airlines. Here it is. So if I pull up Delta Airlines, we can take a look at this company, which is sensitive as anything to the economy being strong or weak. And so when we look at this, when we say, okay, Delta Airlines has already kind of been seeing slowdown in their top line, right? Their revenue numbers have been declining here recently. And by the way, take a look at their net income. You can see it is very sensitive. The profit margin here at just 1.7% has been declining here recently as well. And so we don't, Delta definitely does not want to see the economy slow down. And so I think what the market might have been doing here today is saying, hey, you know what? It might be time to de-risk on some of the more sensitive names within the stock market to the consumer, to a potential slowdown in the economy. Another thing is we just talked about Amazon and Apple, right? So don't get me started on Apple. I recently did a video about it on why I've been kind of disappointed with that stock. But let's take a look at Amazon here as well. Now, Amazon has some pretty impressive revenue growth, and net income has really still done pretty good. Profit margins at 10 plus 11%. Profit margins have actually been growing for the company. So that looks pretty good. Where Amazon is a challenge is the valuation is, and has been for many years, a very highly valued stock, right? So while the stock price has gone up, so the PE ratio has also stayed elevated with PE ratio. Forward PE of 35, PE ratio in the 30s. I mean, it's not a cheap stock. And so I do think that with this announcement, with this uncertainty that, okay, well, if that's the new paradigm, could this increase the possibilities of a recession? And I think that certain stocks took a bit of a harder fall, like Apple, for example, which, by the way, on Apple, I did also sell a call on this one. If we pull up Apple here, there we go. So I did actually end up selling a call on Apple as well. I sold the 210 strike price calls against my position. So I do have some upside here if the market continues to move lower, but you can see how quickly with today's drop off, those calls are already up about 55% on my max profit. So I am thinking that, if this thing wants to keep going, I'm definitely going to let these calls go to expiration. If the stock rallies and I get taken out of my position, I'd be happy to let the shares go. You guys know, if you've been watching my video, I've not been particularly favorable towards Apple in my commentary. After looking at their stats here, if I pull up Apple, you can see just not a really impressive chart here in terms of their revenue. Profit margins have, held up. They're pretty high profit margins. It's a cash machine in terms of a business, but the valuation's very, very high. the revenue growth has not been particularly attractive at just around 5% year over year. You're talking about a ginormous company that I think is more oriented towards behaving like a value stock rather than a growth stock like some of its mega cap peers. So when it comes to Apple, I've talked about this one not particularly positively. Just wanted to kind of share that concept. But with with other stocks in the list here, I also sold some calls on my Airbnb position. But then there were some stocks that held up decently well here today. Some of the tech names in my portfolio. Robinhood continues to be a beast here. Fortinet in my portfolio kind of flat. Uber still is a monster here, and I do think that Uber's one that I've talked about wanting to add some share to on this list. So if we do see some pullback here in the broader market in the next few days, I definitely will look to add some shares to my Uber position. If we take a look at SPY, so here's a look at the S&P 500 on the daily chart. You can see still very strong here. We're just real close to the all-time highs. I do think we are likely to tag those or even make fresh all-time highs. And while the tariff announcement, the 55% seems to be sticking number, while that does cause some uncertainty for certain names, I do think that the bigger picture here is that now the Fed may have a little bit more clarity on whether or not it can cut interest rates. We also had a cooler than expected CPI print, and we've had a round of economic data in the United States that's been, not particularly favorable. And so I do think rate cuts are likely coming down the pipeline. So when we talk about rate cuts, there are certain companies, obviously, that perform better in a rate cut type environment than others. For example, higher valuation companies actually can do okay in environments where the economy holds up and you get low interest rates and low inflation. So I do think that I'll probably have to make more videos about that as time goes on, but I just wanted to give you a bit of coverage on what I think was interesting about today's price action in the stock market. If you enjoy my videos, if you enjoy my commentary, consider subscribing. By the way, if you want to check out the stock box, which is what I use to analyze financial data, sentiment data, technical data, and more, I'll leave a link in the description down below to where you can explore it. Thanks for watching.